For
Oh my
those
God.
who are joining on TikTok here, what's going on? Um, you can get this on you can get this on YouTube, but we're having like an internal meeting right now. You can get this. Yeah, I can hear us on YouTube now too. Fifth time's the
Hey,
charm.
third time is the charm. So we were kind of in the realm of talking about how capital rotations and flows go from, large cap to small cap as people were making money on the large cap, as will use this analogy saying it's like water overflowing a table. But we wanted to talk about what are some of the factors, what are some of the characteristics, what are some attributes of the market that you want to pay attention to understand when a trend in crypto or a trend for Bitcoin is breaking. And that's kind of the premise of what we were talking about. And what we were discussing is right before we were interrupted was I was saying, Will, at what point do do we get to that point where people believe in this so much again that it almost becomes like some people's identity, where it's like you believe so much in the asset that you're invested with, and this can be any across any type of asset, whether you're wearing gold, Nasdaq, or Bitcoin or crypto. It almost becomes an identity for certain investors that have that level of belief. And at that point, that's where people start almost playing the trend of what is going to be the future, right? Like, and that is the whole utility token uh, case that we were talking about, and why we haven't seen that type of capital flow yet go from maybe Bitcoin, Solana, Ethereum, and fall into some of these other altcoins that I know a lot of people are familiar with or might even hold still from the bear market. Why haven't we seen those smaller to mid cap coins rally like we've seen the larger cap, more liquid ones, and some of the meme coins? So that's kind of where we were at.
I think they can.
That
Or
would be
they said that they can't hear you, Will.
ADX. Let's go with that. All right, now they can hear me for sure. All right, I can see it on here. Yeah, no, I think with the what we're looking at, some people are calling it a phenomenon or whatever it is, yada yada yada. I don't think it's a phenomenon. I think it's just it's a lack of exposure. It shows the lack of exposure, right? And a lot of people are becoming and will continue to become exit liquidity. Not necessarily exit liquidity in the way a lot of people think, but more later cycle, right? They're going to get bought into narratives and bought into things that, will or will not come to fruition. And I think most will not. At the end of the day, the lack of exposure is showing by the meme coin rotation immediately, which will later on turn to belief, right? And so we can almost cycle this. Like we can almost cycle this like the Wall Street cheat sheet, right? So let's pull that up for a second, and I'll give you guys an example of like what I'm talking about here. But this is the exact emotional like roller coaster that retail's going through at the moment. Uh, cheat sheet.
Are you talking about the like the cycle like chart where it shows like different emotional states?
Yeah, yeah, and I think like if we were to take that and visualize that, and let's drop this down for a second, and we'll pull that up, and we were to look at this as like the market as a whole, right?
You have to share it. Okay, you're
Yeah,
sharing it on your YouTube. Okay, never mind.
yeah,
Continue.
it should. Oh yeah, yeah, I forgot. My bad. You are correct. Let's do it that way. So let's do share, and we'll share this image. All right. So if we were to look at this from like a standpoint of like where people are, like people were kind of like here, right? They were in denial, then they were in panic. This is your whole FTX collapse. This is your anger phase, right? This was the bear market when when we were almost reversing. To be honest with you, I would say like 25K Bitcoin somewhere's in there. You're probably looking like, even though we're coming down here into like the depression phase, like this is where Bitcoin started reversing and people just were in this. They were in disbelief, right? And so with this whole cycle, it's just been one big emotional roller coaster for a lot of retail. And now people are basically coming over here to what I would arguably say is more of an optimism, right? So we're kind of moving into this optimistic. This is where we were. We were kind of in this hope phase, right? Hope that we'd turn around, hope that things would get better. That happened around 25K Bitcoin. Once we got up to like 14, or sorry, not 14, but 40K Bitcoin, we then saw kind of this optimism phase where people were a little more optimistic about the rally. They were a little more euphoric, right? So on and so forth. And that's why when people say, "Oh, it's so euphoric, it's so FOMO," it's like, no, that'll come later. That'll come later. Once the belief starts to kick in. This is belief. So again, this is where you can start dialing out and start being like, okay, I need to start looking to TP and or pay attention to the market really closely, because eventually it's going to be thrill and then euphoria. We haven't hit the euphoric stage yet. A lot of people think we've hit that. I think we're still in the belief stage where people are believing that the cycle will play out. They're starting to put their money where their mouth is. And a lot of people that were still kind of here in the hopeful stage or the disbelief stage, I think there were so many people on the side of disbelief, while very few investors were on the side of belief, right? And so all these disbelief people are so off sides that they are now having the position at a much more riskier scenario. Not only riskier, but also they're having to position heavier, right? So that means like these meme coins that are hitting like 10K, 20K, 100K buys, that's the risk appetite that there is. But it's not risk appetite because people are like, man, everything's fine. It's risk appetite because people are scared that they completely messed up on the macro discussion, right? So they're positioning in a way to allow them to catch up to the rest of the market that hasn't been here. And so now we're kind of here. We're in this belief stage. Everybody will start believing here. Everybody will start coming together. Utility will start to kick in somewhere between belief and thrill. And that's where everybody starts to believe crypto is the future. It's going to change this and that, yada, yada, yada. You guys know how it is, the typical narratives. And then people are going to be like, oh, well, the ETFs and the cycle's different and yada, yada, yada. And all the same stuff that Aaron, we had this discussion in 2021. We had the same discussion in 2021. I was like, no. I was like, look at the macro conditions. And I'm the guy sitting there laughing at macro guys right now because like they're just wrong. But at the end of the day, in 2021, I saw it coming. Nobody else did. And then the Fed came and said, hey, we're going to raise rates. And I was like, oh, that mean nothing. They're going to do nothing. 9% inflation? Of course they are. And I think we'll get back in that inflationary environment. It will happen. But again, belief, the thrill, and then thrill to euphoria. We still have quite a bit of ways of upside to go here for this market. It's just about how does it rotate and where does it rotate. And again, I think it moves from people catching up, aka memes, into utility, which is part of the thrill, right? Now everybody's in this belief stage. They believe that crypto is the future. They believe in the utility. They believe in this and that. They believe that none of their coins are going to come down 99x, which most of them absolutely are. And then we get to the euphoria stage. Again, this is everybody is in profit. Everybody's playing on the same side of the playground. It's crowded and nobody wants to leave. They don't want to go to the uncrowded side. They don't want to take profit. They just want to buy and hold. And then once you get to that state, that's where your market maker starts crushing you. And then complacency, and then anxiety, and then denial, and then panic. It's a normal cycle at the end of the day. I don't know what your guys' thoughts are on that.
Yeah, I think you walked through that really well. Two things that I want to highlight. One, I think about, why you talked about risk taking, why are so many people taking extraordinary risks when it's one of the major differences right now than say like 2020 or 2021 was you can actually earn 5 to 5.5% risk free on your money by just, letting it sit in cash. And so, why do you think, with that differentiating factor, we're still seeing that type of reach for returns and yield?
I mean, if you were a money manager and you were managing millions, if not billions of dollars, right? And your exposure isn't keeping up with the rest of the market, what would be your thoughts on that? How would you be positioning? Especially if you've got your customers calling you every day, like, hey, JP Morgan over here positioned this way and they've gotten this much return to all their customers, but you've only gotten me 20% this whole year.
Yeah, no, I mean that's definitely a common dynamic in the wealth management industry, being that that performance chase and that that you know performance anxiety, if you will. And I mean, it comes back, like, if you are a money manager, though, it comes down to, like, I guess, you're acting as a fiduciary of your clients, and what you believe is the best long-term strategy to compound and grow your wealth. But yeah, I mean, that's a common case where if you fall behind, you're forced to try to chase and buy high in order to match those index returns or try to outperform the market in another way.
Well,
So
I think you got to evaluate that in two ways, and I think that that's the part that a lot of people miss. You either buy high or you buy low. And where does buy low happen? Well, at this point in the market, it's only in risk. You can only buy low in risk right now, right? There's no buy low in high caps. There's barely any buy low in mid caps. So people are having to risk if they are that far behind. If they are looking to maintain and keep clients, I would say that they have to go into risk. And again, it reaches into the discussion of where I was talking about, where I'm seeing again this scenario where you're seeing market makers move into meme coins. This is a perfect example of underexposed and having to catch up to the market. I don't know what are your thoughts on that?
Yeah. Well, one of the things that we track is because this has a lot, like the market psychology, a lot has to do with like investor sentiment, right? And a couple of things that Aaron and I track is the AAII investor sentiment, as well as for like investor sentiment, and then we also track the NAAIM, which is like money manager sentiment.
it's an exposure index showing what percent of their portfolio they allocated to equities.
And if am I do I have the ability to share my
You
screen here?
should. Is it will allow you or
Let me see.
And those
I
that are listening,
think it
this
has
is
disabled.
this is equity related sentiment, but I guess it could measure. I mean, I guess it could just be money manager sentiment overall or overall market sentiment, but generally speaking, this is gonna, at least like I take it as more of a equity related sentiment rather than crypto.
you said you are or aren't able to?
It says that
Oh, I was muted. My bad. Hold on, let me make you host.
I think you can just do co-host.
There we go. We'll just make you host. It's fine. We'll circle the host.
We'll do pass the potato.
All
All right.
right.
So yeah, I mean it's just it's interesting for sure. I'm trying to see here. Yeah, because this is for equities. But Aaron and I have been trying to track this a little bit closely just to see how we can kind of gauge both investor sentiment and money manager sentiment. Just because you touched on that a little bit, Will. We see that yeah, the red here is bearish sentiment and the green here is bullish sentiment. And it was kind of neutral during that time where like people weren't really sure. And again, this is for equities, right? So stocks. Um, but yeah, during that time in later 2023, they weren't really too sure. Um, but now it is definitely more leaning bullish, but this could last. This could last for a while and oscillate, right? That's actually when the market historically has taken off a lot, is when it's at these ranges. Um, when we take a look at the spread, which is basically these 2 points subtracted from each other, you get a little bit more of it like an even out, where positive 25%, the difference is normally a time when it's like extreme greed. And then same thing with, negative 25%, right? Because like back in 2022, if you were buying while this thing was, near really low sentiment, now you're up a lot, right? Same thing with like back in July of last year, if you were, maybe distributing some of your profits that you're taking down here and up here, then you were winning when that had its 10% drawdown from July to October. Obviously we had a huge rebound from the crazy rally, but yeah, investor sentiment, it definitely is feeling a lot better than it was in 2022. And then in terms of like money managers, to your point, Will, yeah, they actually are trying to play catch up. um they're seeing things do really well, and so, this has been trending up more, but, you know, I just thought it was interesting that you're making that commentary, and you can also see it like on a graph here as well.
Yeah, because right when I guess at the end of that sell off in the fall, you can see on this chart how people basically took their equity exposure to the lowest level since the market lows in
Like
2022.
bottomed.
So I think that these charts don't nail tops and bottoms, but they give you a general idea of where the extremes are, and I think they're much better on a shorter to intermediate time duration of where people's sentiment might lie. But one thing I want to get into, John, if you can you share the rate of change of net liquidity? Because Will, you were kind of giving a knock on macro a little bit, but I think macro has actually supported the what's happened in crypto over the last call it 9 months to what it is now. Through We've had accelerating economic growth over the last year. Well, you can call it accelerating on paper at least, and we're seeing overall net liquidity continue to accelerate, make higher lows and higher highs, which has historically been a favorable environment for Bitcoin and crypto. So with that, I'll let Johnny throw up this chart, but the question I have for you is that where, if we can continue to see this either sustain economic growth or have inflation reaccelerate from here, that would be a positive environment for crypto. So do you have any view or have any thoughts on where inflation goes from where it is right now?
Yeah, I don't remember if I touched on this with you before in the latter half of the year 2021 going into 2022, but I always had the thesis that inflation would come back and they wouldn't get it under control because of the way that they went about it. They were kind of late to the show. They're still kind of, you can see the acceleration already re-happening again as far as liquidity inflows and people get, just making exponentials. And I think inflation will be a factor again, probably in the next year or two. I really do. I think we're probably, the show probably ends in a couple years. I would say arguably 2025, 2026. And, it's always for me at this point, like I think it's the easiest play is to always just play your 4-year cycle. And it's not about Bitcoin's 4-year cycle. It's about presidential elections. It's about liquidity cycles. It's about a lot of different things that I think a lot of people don't consider, right? And whenever you change hands um, from one president to another, you're always going to see a different response from the market. Tends to be either very bearish and a bullish or bullish and a bullish. It's kind of a weird scenario. But I would say like going from 2021 into 2022, that was your bearish into bullish, right? So we got completely smacked in 2022. And in 2023, we started to come out of that. Now, we could argue nuances with like, banks being backed, yada, yada, yada. I know everybody likes to have their opinion, right, on what the Fed was doing there. And by Fed, I mean Federal Reserve. But at the end of the day, this is supposed to be a free market. You're not supposed to be bailing banks out. Let them freaking fail. Um, and but that's exactly what that is. Giving somebody a loan, regardless of whether they have to pay it back or not, it's floating them, right? It's floating a debt that you should have had already had covered. Whether or not you could foresee the future, nobody can. Were you overexposed? That's what will tell you. If you're going to go under, it means you were overexposed in this market. And if you try to argue that point, I think it's just it's a bad argument at the end of the day. And I think like just not enough people considered that. I put a slide specifically at macro just as the last touch because I talked with a lot of the smartest people in this space. Like I talked with, and again, no shade on these guys. They are very intelligent. Michael Cantro, Michael Green. I've talked with a lot of these guys. I told them exactly what was going to play out here because it was very obvious by liquidity and by charts. And they, I got pushback that SPY doesn't have to see all time high. I said yes, it does. And then I said historically it does. And then they try to argue, I think one position to where it didn't one time in history, 1970s. Well, maybe two. Maybe I'm wrong on that. Maybe two. But that's all of history, right? And then Cantro was positioning, I think, very, very cautiously with bonds and so on and so forth. And I was like, I don't know if that's really the best position to be taken. Am I a money manager? No. Am I probably better at paying attention to markets? I would argue yes. I've seen a lot of money managers do a horrible job in comparison to what I've done. That's not a slide at them and a prop at me. It just, I think some people get it and some people don't, right? The government controls the liquidity cycles, and a lot of people don't understand that. And the way that they do that is the second they got us off the gold standard, and started printing, they now control when there's bear markets and when there's bull markets. And people just don't get it, right? They don't get it. This is why you have an issue typically every 4 years with presidential elections coming into play, is because of the presidents, right? As well as the government, as well. They control the liquidity.
Well, yeah, I mean, their policy perpetuates more volatility in the market.
Yeah, and I don't know what your guys' thoughts are on all that. But I know that was pretty long winded, but I mean that's a lot of my thoughts as far as like what's going on.
Yeah, I mean, I think that was a great thought, and yeah, I mean, it's funny you had I didn't know you had a conversation with Mike Green. That's funny, but it's, I guess there's different, you can look at macro in different ways, and I think one of the ways that specifically as it pertains to crypto, one of the things that Johnny and I really looks at is the government's influence and their interventionist policies that impact the market. Recently, it's really been the acceleration of deficit spending. And that's really floated what Johnny has on the screen, this chart of net liquidity continuing to accelerate on a year-over-year basis. And that was really part of the bottoming process for a lot of assets. So, I mean, that's one of our biggest factors in our model. And I'd say the second one, which Johnny, if you want to throw this chart up, it's one of my favorite charts, is if you're looking at high yield spreads, whether or not this is a true representation of how risk is being priced within the market, right? I mean, I kind of disagree with where these spreads are being priced, but I'm not going to ignore where the trend is going. And the trend for high yield spreads has been bearish for some time. And the inverse, if you look at an inverse chart of Solana and these spreads, it's pretty remarkable to see where the risk taking starts and stops with these spreads.
I did have something, on Solana specifically that I think a lot of people don't understand about Solana. And you could really take two positions from it. I don't know if you could pull up the DeFi llama, Johnny, for TVL, but this is a very unique scenario. And one thing I've noticed is that Solana will always be a performer in a volume driven market, but will always be an underperformer in a bear low volume market. And it's based off of TVL specifically. And I think just not enough people put enough thought into that. But if you notice Solana's TVL, and I take TVL as more of a position that uh, we'll say the market feels confident in an asset slash wants to gain yield from an asset. Solana is one of the lowest yielding TVL, or not lowest yielding, but lowest on the TVL platform, right? If you were to take a circular, so if you do like an overview of all the chains together, I don't know if that's it should
Do
be
you see
like
my
a
screen?
yeah, it should be like a circular chart.
Mm,
Try maybe try clicking. Yeah, that one. So if you look there at Solana, you're actually being beat by Arbitrum, Bitcoin, or sorry, not Bitcoin, Binance, and Tron. And that to me tells me that Solana's price is purely driven out volume as of right now. Because if people were confident in the network, they would be locking more liquidity there. They are not. That means that the price or price drive, and as long as Solana continues to climb, you're going to continue to see a bull run occur, right? But at the end of the day, when the next bear market comes, if Solana can't up that TVL, it's going to get crushed just like it did in 2022.
Right.
And that's a hot point for some people, but it's just the reality of things.
yeah, for these chains, that's a huge deal.
So I don't know if everybody understands the nuance between that, but like I take TVL as like think of it like being confident in a business specifically, right? And in that confidence, um, more or less, the more confident you are in something, the more you're willing to put your money where your mouth is, right? And TVL is an example of that. And I think like just not enough people put enough thought behind that. And I think like if you put more thought behind it, you can be more confident in the network that you're invested in. Again, this is a great example of Solana bleeding down to $8, right? While Ethereum on its second bounce down, while Bitcoin formed a lower low, was able to form a higher low against the rest of the market, aka strength. So I don't know what's your thoughts on that there, Aaron?
On Solana's strength.
On just Solana being a volume driven type of token right now versus a confidence token.
I think that I'll let Johnny speak more to the fundamental aspect of what you just said. I mean, to me, I think it really what you said makes sense to me. However, I don't particularly have a view specifically on the TVL, and so I don't want to say something that I'm not necessarily knowledgeable about. But I mean, I think what
Well,
you makes sense. And when the way I look at it is, going back to these spreads, if I this is kind of how I contextualize it. Solana's making higher highs, higher lows. One area where it has really done well is in these higher speculative environments, which is where you see that this chart of high yield OAS, which Johnny has on the screen, when you start seeing those spreads dip below 350, and that's where you really start seeing a lot more risk taking. And I think where that intertwines with what you were just saying, Will, is that when you're having more risk taking, that can be a volume driver on that chain, right?
well, what I have just lined up here is what you were saying before, both of what you guys were saying before with like, volume and risk taking and things like that. What was interesting was this top chart in blue. Again, this is high yield bond spread, right? The junk bond spread. And, usually when financial conditions are easier, that's where you see, the bond spreads, near this 350 basis point level or below. And so, you go back to the peak in 2021, that's where it was kind of at and where it's trending towards down here. And on the bottom, you have Solana. If you just do an invert of this chart here, when when was this? This was October of 2023. Once this reversed, I mean, that was really when Solana was taken off. So whatever happened in October, at the end of October 2023, beginning of November of 2023, I mean, that's like really when Solana took off there. And it's interesting how you saw, the risk appetite also increase and the junk bond spread as well. So it's interesting to see that correlation.
Totally.
Yeah, I think just when you looked at the market as a whole and you saw kind of Bitcoin do its first engulfing for me, it was very telling that something was going to occur. Did I know it was going to be a dead cat bounce, or did I know it was going to be a trend? That was the question at the end of the day. And I think that's where a lot of people were confused, me included. I'm not going to sit here and be like, hey, I didn't think it was a dead cat bounce, because I wholeheartedly did at first until the trend was formed, right? And once I started to see the trend form at roughly 25K Bitcoin, I was more confident in that I shouldn't sell my positions and I should continue to add to the market, right? And I think that that's where things really flipped for me. Don't get me wrong, like I played the low to the high, and I was tempted. I was tempted to get out of the market at that position, and then I was like, hold on, I was like, I need to relook at this. And then I think like once the trend was formed, it was just it was pretty obvious.
Yeah.
Yeah. Uh,
I sorry, John, you go ahead.
yeah, no, I just wanted to before I hand the host feature back to Will, because I'm sure Will wants to show some charts too. But and didn't mean to interrupt you, Aaron, but going just capping on the liquidity aspect of it, which is one of the things like that our macro thesis has changed a little bit, is really paying attention to this net liquidity metric. Was on this day when this was December 26, 2022, we finally started to see the percent change in central bank net liquidity, bottom out. And you got that confirmation back in March of 2023 during the banking crisis when liquidity shot up right here. Bitcoin loved that. And that's really started this positive trend back into positive territory that we haven't seen since pre-pandemic. And this was a very early sign that, it was going to be long-term favorable for Bitcoin. And in hindsight, I personally wish that I paid attention to this a little bit more. Um, I think this would have definitely helped, me get into Bitcoin a little bit earlier than we did back in October of 2023. But yeah, taking a look at the relationship here between central bank and fiscal spending, it's had a huge influence, in my opinion. And, obviously you don't want to pay attention to just one factor, but this percent change in net liquidity, I mean, that thing was accelerating, and that should have been the key, like, hey, start to snag up some Bitcoin early.
You go ahead, Aaron, and I'll jump in there after you if you want.
Well, no, I mean, I was just gonna say, I mean, no reason to say that. I mean, it played out right. I mean, part of having an adaptable and a process that actively changes is that, I was gonna say that, yeah, I mean, I definitely, I'll definitely go back and say, like, I thought that it was totally gonna be a dead cat bounce at first, but I quickly recognized that, okay, this is once it was not, I was okay, this is not going to be a dead cat bounce. And I saw Bitcoin dominance accelerating early, which to me was more of a, okay, get out kind of, get out of the way on that. Don't be short that, or don't go against that. Just kind of see how that trend develops. And Bitcoin dominance ended up, really taking over from that point in February. Around, I think this was around February of 2023, whenever I wrote about that. But I think that, Johnny, you mentioned saying that you wish you were on board earlier. There's, I don't think that's necessarily accurate, because I think you specifically recognize that metric accelerating at the appropriate time. And October of 2023 was about the same place that you could have got, 25 to 27K Bitcoin have traded in that range for about 3, 4, 5 months. So there's no, I mean, in that case, it was a properly, in my opinion, it was a properly timed decision that you made.
I think 25K Bitcoin is a fair position for anybody to wait for. I think that was honestly like I would not throw shade at anybody who's like I got it at 25. I wouldn't throw shade at anybody who said I got it under 30. But I think like once you started hitting 40, 50, 60 and you're not realizing what's going on, you never knew
Right.
all along.
Right.
Right. And I think that's the hard part to gauge for a lot of people is like who was positioning, with risk in mind and who was not positioning just because they were talking, right? And I feel like there were a lot of people talking, but like not enough people looking at the data and understanding what was actually occurring. And again, I don't know. I'm not even gonna lie. Like, I don't even know how I figured this stuff out, guys. Like, I just go out the charts at the end of the day, and I let the charts dictate kind of what it's telling me, and I don't argue with the charts, right? And I think that's what a lot of people do is like I feel like some people have data points, they stick to those data points, those data points have worked for them, and then when that data point is no longer working for them, they then switch to new data
Find a new
points.
one.
And that's the wrong approach. That's the wrong approach. Do not switch your data points just because they're not in favor of what you were looking for, right? Understand when the trend is flipped and go with what it's telling you. And
I agree.
that's the strong point. That's the strong point. I think like that's the one thing I've always been good at, and that's why I do well is because I am able to look at the data points and understand what it's telling me and just go with it. Like I don't argue, I don't fight with it, I don't try and look for nuances or ways to disprove what the market's telling me. I just like, okay, the market is telling me this. All right, that's what it is. Just like, at the end of the day, go with what it's telling you. But if we were to look at this was kind of an interesting position that I saw with Bitcoin specifically, and this is honestly what I went off of here, and I was like, oh, okay. I was like, this thing's gonna go absolutely ballistic from here. I was like, people are gonna be so off sides, it's not even funny. So what I did in October, funny enough, is I started positioning in trash coin meme coins. Like I started positioning in very, very, very high risk, and only because I knew that people were underexposed to a high degree, right? And so once you saw that kind of double bounce here, now granted, these don't form the same way. Now this was the problem with people looking for the whole pandemic thing. Is if you look here, it's a wick, right? But if you followed your bodies on the monthly, it showed you your true trend. And so again, you follow your bodies. Now everybody was looking for this pandemic wick. It's gonna pull back. It's gonna pull back. Market went the exact opposite direction in a double bounce. Now, granted, you might be like, well, you couldn't see it till hindsight. You could actually see it before hindsight. If you threw this on a lower time frame and you just kind of went off the lower trend here, granted it was angled a little bit more before it played out, you could have seen this well before the trend, right? You had this long trend here that you could have just been like, all right, let's anticipate based off of this trend and look for price to pull back to here. And now granted, it never happened, right? It pulled higher. And that should have been your first indication. Once you shot up here, hey, we're going a lot higher than what people are thinking. And so once that happened, then I redrew my trend based off of this low and this low. I was like, all right, we're going to respect this trend, and people are going to look for somewheres along the lines for this thing to come back and retest trend. But guess what? That doesn't occur. Why doesn't it occur? Because if you go on the higher time frames here, again, charts are just like data, just like any data. You just got to follow the data. If you go back to the higher time frame, Bitcoin only taps once, twice, and then up. Once, twice, and honestly, I think it's up from here. And I think just a lot of people are not exposed enough. They know that. They're in the mid-market. They know they're in the mid-market. That's exactly what this is here, right? People now are able to identify, hey, I'm in the mid-market. Just like over here, look, hey, I'm in the mid-market. And people were like, oh, shoot, I've been wrong the whole time. Oh, shoot, I've been wrong the whole time. And now you're starting to see what? You're starting to see meme coins pop off. Why? Because I need to catch up to all of this. I am way behind on this market. So people are looking at this from an opportunist standpoint, and they're like, where's the easiest place to catch up in crypto? It's narratives and meme coins. So they're like, all right, let's go with the meme coins. I mean, they're already 3x behind Bitcoin, right? They're already probably multiple X's. I would say it's about the same for Ethereum. When it comes to altcoins, they're 10x, 15x, 20x, 30x down. Why would they buy a utility coin? They'll buy meme coins. And now here's where the meme coin transition will occur. And as people become millionaires and billionaires in the mid market, they're going to start to shift back to Bitcoin. Why? Because they only need 2x on that. They only need like a half an X. They don't need as many X's because they've already siphoned all the liquidity out of the meme coins. So then what does that do for Bitcoin? It then pushes utility back into play. Bitcoin shoots up. Bitcoin hits a top. And then once Bitcoin hits a top, we'll probably see something very similar to last cycle. Now, why do I think this? Does it mean that this has to occur? No, that doesn't have to occur at all. And I think that's what a lot of people don't understand. What you're looking for is this. That's just, ignore the middle, right? It doesn't matter if the middle happens or doesn't happen. What you're looking for is a market, right, that is distributive. This is a distributive market. Once you start to see distribution start to take place, aka these round tops, then you need to be like, oh shoot, I need to get out. And that's where you need to start being cautious. And I don't see a round top yet. I don't see one. I see this right now. This is what I see for the market. Until I start to see that distribution, this is all I'm seeing, right? Until I start to see that distribution, again, over here, this is what I'm seeing. And that distribution could happen here. It could happen here. It could happen here. Where it happens doesn't matter. I just need to pay attention to where it's happening, right? I have another indicator to add to that. What's the other indicator here? It's over here on the BLX, right? So one thing I've noticed here is that your expansions get smaller and smaller. And I think that this is for something that's a little bit off or will throw people off. Big expansion, right? And then over here, same thing, less expansion. Over here, same thing, less expansion. And over here, a lot of people might argue less expansion. It is 100%. Look, Bitcoin from, hold on one second, let me fix this. From low to high, I don't know why it keeps trying to snap there, but from low to high, let's say it goes to 200. That's not that big. That's smaller than this one, right?
Well, it'd be bigger than the prior two, right?
No, it'd actually be, so this is 1200 right here. If we look here to here, okay, 1,000. Yeah, yep. Yeah. But what I'm expecting is that this right here over time, I'm going to explain this, is you've got 1, right? Then you've got 2. And really you could probably copy, because I don't know if you guys know this trick, but if you copy move, it usually like drags down. But here's another one right here. And
I have
then
a question for you when you're done with this, by the way.
Yeah. We'll definitely discuss it. Let's say
I got a few questions too.
Let's say we replicate last cycle. You're gonna hit 200K. You're gonna hit 200K. That's literally just copying it up. Now, what do I think happens here with this compression? Well, again, I think this I'm gonna show you this right here is one big distribution that turns into an accumulation later, right? Now, some people might argue that directionality, yada, yada. I'll give you an example of where that occurred. Very good example of that, right? Right here, Tesla. One big distribution that turned into expansion. One big distribution that turned into expansion. And it's all about, will Bitcoin continue to be adopted or will it not continue to be adopted? And if you could argue that it's going to continue to be adopted, then you're going to argue this case, right? If you argue that it's not going to continue to be adopted, first off, you shouldn't be investing in it. Second off, I would say that in that case, you're looking for this thing to completely turn around and go to zero at some point, right? I think just a lot of people, they stay so zoomed in on a chart that they can't actually see what's going on with the overall market, right? One more thing to add to this on the BLX specifically, so we discussed this, is what do you guys see here with the RSI right here?
Trending lower.
It's trending lower. It's a bear trend, right? It's slowly getting shoved down. That's the distributive top, right? That's the change in the hands. That's the distribution. But the part nobody will see is when this distribution gets squashed to so low and then expands, right? It's a pressure expansion.
I mean, distribute. I think. It sounds like you're just talking about a longer term consolidation, not necessarily. Distribution. Or maybe it's interchangeable. I guess
Interchangeable, yeah.
when I'm thinking of distribution, I almost more think of like you're at the top, and that's where people are distributing before like distributing at the top before something has a significant drawdown.
Mm-hmm.
But I think that one question that I have in mind is that you just kind of and this has kind of been the talk of the Bitcoin cycles over time, is each one is kind of slowly incrementally showing less return as time goes forward. But I think what is a completely different factor going forward is going to be these spot ETFs, because now we talked about price inelasticity earlier, where funds or BlackRock, for example, when they're adding more Bitcoin because of flows going into their ETF, there is no quote unquote like buy, like, oh, I'm trying to bottom tick this price. Like, it's they're, as money comes in, they're buying coins to add to
Actively.
their.
Yeah.
And as we move forward from here, the push is not just going to be getting money into that fund. The push is going to be BlackRock is selling this product as part of an investment strategy to money managers. And that changes, in my opinion. I think that long term changes the game, because now you're at a point where you're getting almost 401k flows, or potentially 401k flows into, say, BlackRock spot, or BlackRock, Fidelity, or Vanguard spot ETFs coming from 401k allocations, because maybe one fund that you're invested in through your employer has a 2% position in IBIT, right? And at that point, I don't know, in my mind, I think that raises the ceiling a lot more than some might say or argue, based off of the diminishing returns of this, that kind of like cycle theory. But that's just my thought on that.
Yeah, I think like we shouldn't focus so much on are they buying or what that buying will accrue, because I think the most important part here, specific, at least for me, is are they here, right? And if we can arguably say yes, they're here, that's all that matters. And if you know that they're here, you know what their intentions are. It's not to make a 2x and cheat on everybody, right? It's to create a market within Bitcoin, within crypto, that they can try to control, regardless of how they have to get that exchange done. And I think though too is them buying again. I would continue to kind of more point back towards it will probably be OTC and probably will not pressure price as much as people think it will. The way it will pressure price is retail coming in trying to buy open market, and there not being enough of an open market to buy, right? Because all OTC is bought up, and then again, OTC can also be bought through miners, so it's infinite. It's never just gone. Like I continue to see people on Twitter scream the point that OTC is dried up. It's like, no, miners have a ton of OTC on hand that they will actively exchange with BlackRock and everybody else at current market valuations for big chunks. And, they'll be able to get an even price because it's OTC, and BlackRock won't shoot price up, and they won't shoot price down by selling. This at that point will give an even distribution of miner selling, right? So now miner selling is net zero, right? They're not selling any Bitcoin. So then at that point, every retail participant that steps in will push price. Does that kind of make sense? So it's not saying that miners can't sell or won't sell. It's saying that miner selling will be heavily mitigated by OTC of BlackRock and so on and so forth. Does that?
Yeah. I guess it just, Well, I mean, I guess like you said, it comes down to net, like, are miners selling more than the amount of money that's flowing in through retail? And basically what I was just saying, I mean, part of that is retail. Like as someone who invests in a 401k, your money is taken from your paycheck. You don't even think about it, and it just goes into a
Yeah.
fund. And then so
So,
that's
but what you're talking about is responsible investors versus irresponsible investors, right?
not necessarily. I mean, you could call, I mean, anyone who owns, I mean, you could call, if you have a 401k and you just have it invested in, say, BlackRock's mega cap exposure, BlackRock's um, small cap exposure, right? It's not, doesn't necessarily make you, if you have a 401k, doesn't necessarily make you a sophisticated investor. I mean, most people don't really look into the holdings of what is it actually in those ETFs, right? And there's actually a lot of junk in some of those ETFs. Like there was one, that small cap one, that I was invested in, that at one point I read the prospectus and I was like, Peloton, like that was one of the top holdings of a small cap fund.
Well,
That
I
it
I,
was
I think there's an easy answer for that, and that easy answer is BlackRock probably bought the wrong stock, realized it, shoved it into one of the ETFs to be able to mitigate the blows that they took on buying a stock that's not doing well, right? And that's always going to happen with the high risk side of the portfolio for BlackRock or for Fidelity or for whatever these money managers are. They're always going to stick losers with winners to mitigate their losses on that side. Does that make sense?
well, I mean, maybe I'm not following.
So like if let's say they bundle a bunch of things together, right? And they call it an ETF. And they bundle a Peloton and a Tesla and a Lucid and a Rivian, and just bundle them all into one ETF and say this is a high growth portfolio ETF, right? And they say this can be X amount of your portfolio. Well, maybe one of those is a big loser and they realize that, and they have a bunch of that on hand that they've bought. They are
Right.
mitigating that on hand losses through throwing it into this ETF and actively selling it with good growth potential stocks to you, and you're the one mitigating the blows that they took on purchasing those bad stocks.
Yeah, no, I mean, okay, I have a better understanding of what you're saying now.
Yeah, and I think it's a hard one to kind of grasp, but I think just not enough people entertain it, that these people or these funds will use you as a way to mitigate their losses because they don't lose. They don't lose based on the fact that they will bundle stuff together. They will do whatever they have to do to mitigate their losses on a losing position. And in the case of Bitcoin, arguably, I would say like a sophisticated or a good investor would obviously have their risk management in check. And in their 401k, they may have Bitcoin, which may be considered very high risk, but they may be mitigating by using the rest of their portfolio to offset in the SPY and safer positions that aren't going to see as much downturn necessarily, right? Or bonds or so on and so forth.
Right. Well, I mean, that just goes back to having a diversified portfolio in assets that are in a bullish trend, moving in the right direction, cutting your losers before they get much worse, right? I
Yeah.
think I think that's the importance of having diversification and being diversified in the right assets, because you can be diversified in the wrong assets. But if you're diversified in the right assets, there's going to be times for maybe 3 months where one side of the portfolio is doing much better than the other side of the portfolio. However, it's doing so much better that you're still making money. And then when those assets take a breather, the other side of the portfolio might start to perform well, and now you're still making money on the other side of the portfolio as the other side that was doing better kind of takes a consolidation or a breather. So,
Yeah. What do you think about this stock?
um, yeah, it's just it's funny. I think it's kind of a whole part of the kind of speculation we're seeing in meme stocks and squeezes, and it's I mean, people did really well on it this last year. I mean, if you could have squeezed the crap out of a lot of people if you bought it at the right time. So it's, to me, it's just been a big pain trade.
Yeah, I don't want to sit here and try and prop the fact that I didn't think that this thing could see chapter 11, because I definitely did. I definitely did.
I mean, I
Um
thought, if you looked at its balance sheet, you'd have been a fool to think that it wouldn't.
and here's the funny part. I was discussing this on another show, how we were probably looking to run up on this thing. And they told me, I don't want to talk about it. It's probably a chapter 11 stock. I'm not interested. And look at where we're at today. But
Well, all the
again,
chapter 11 stocks have been doing really well.
here's the thing. Like, at the end of the day, it's all about what is the market telling you, and what's going on with the stock or
No,
the asset in general.
exactly. No, I mean, I couldn't agree more. I mean, it's about, that's why it's so important, and you've always done a really great job of this, is what is the trend strength that of that asset? You know, if something isn't a bearish or bullish trend, you know, don't fight that and don't go against it. That, like, that's the trend. That's what it's going to be. And if you agree with that fundamentally, you have to be in a place where you can, you know, have that type of compartmentalization in your own head to say, okay, I think this is a garbage company, but the trend is bullish, so therefore I'm not going to be shorted. And
Yep.
then it takes even more mental strength to be like, okay, I think this company is garbage. It could potentially go to zero one day, but it's in a bullish trend, and I'm going to buy it actually.
Mhm.
And that's how you do
But
it.
honestly, that's how I've been taking all of 2023. I'm
Yeah.
just like, what looks the worst? What's the thesis around why it's bad? And what would be the thesis for a comeback for this? And I take those three aspects, I put them together, and I kind of compile what I want to do. And I let the trend dictate me on that, right? And the trend it has done me well. It did me well in 2022, did me well in 2021. That's why I saw the bear trend starting to form going into 2022. Then you had the FTX collapse. Then you had, all these. Well, first Luna, right? Luna was the first collapse that kind of started the House of Cards effect. And then you had the FTX bottom collapse, and then you had banks collapse directly after, like by the collapses, like not the beginning collapses, but the end collapses. And I was just like, all right, let's
Yeah.
let's figure out where we want to get in.
Yeah, whenever I think for whatever reason, I noticed, I was just like, man, Voyager's offering these crazy yields on these coins. And I was just like, this doesn't make sense. And I was just like, all right, everybody, like, I'm taking all my money out of Voyager. If you have money on Voyager, get it off. And then, like, literally the next day or that week, the whole Luna thing happened, and we all know how that went.
But
But
here's the thing too. How long did I sit there on the Discord and yell at people like, "Hey, the top's in on Luna. Like, hey, you guys might want to cut your positions on Luna."
yeah, that was, no, I remember reading that. I remember reading that. So why don't we, maybe we discuss, why don't we look at a price trend of oil? And I want to get where your head's at on that.
So oil for me has been kind of something I've just been kind of keeping in the back of my head.
Right.
But I don't want it to affect my current trading trend, because I don't think it makes sense to do so. But I did, you know me, like I was talking with you about crude at the end of 2021, and I was like, oh, this thing's gonna go up. And I still think that crude is gonna go up. I'm trying to find my old
Well,
oil chart.
well, that's kind of what I want to get into, because if that's what you think, I'm in the same boat, but I don't think that you said you don't want it to affect your trading trend. I mean, I think that fundamentally gives more support to what we've been talking about, in Bitcoin potentially going higher, because if we continue to see this rise in the prices of crude, mathematically speaking, that's going to impact the rate of change of oil's contribution of inflation to the CPI report. And that actually makes it, over the next, say, 3 months, there's really easy comps. And if oil's price really goes up from here, we'd see an acceleration in the price of oil, which would lead to more inflation.
Yeah,
on paper. Yeah.
that's honestly my thoughts too. Is like that's what you're gonna see. Is you're gonna see, and that's what we said more towards the beginning. Is you're gonna see inflation come back. You're gonna see it come back with a vengeance. Um, Probably after the next presidential election, to be honest with you. But like, if I were to take this from a chart pattern standpoint, again, this for me is like what we would call more or less a pennant, right? And a pennant is more of a continuation. So it's kind of like something like this, where price will come into a price zone after getting, because keep in mind, oil was destroyed for a long time. You come into a price zone only to break out again, right? And really, we could see oil as high as, previous all-time high, I think. And we've already violated the other highs, so like there's really no resistance in the lower zone. So if oil starts to break out, you're not going to see a lot of hesitation. You're just going to kind of start to see it just slowly start creeping towards the high here with no real consolidation ranges.
So what about XLE?
We can pull up XLE. This one's a little tough. I'm not gonna lie. Like this is for me a trend. It looks like a trend top. So like if you were to take it, well, actually no, I'm wrong. I am wrong, big time. So like if you take it like that, so think of this like a teacup for me. So like trend wise, like this is like you had the long bull trend. You're cooling down here, and while you're cooling down, it's like a teacup, right? So the only direction for this hot tea is up. And
Right.
so
Been
for me, it's
consolidating.
breaking this way. And you're seeing it by trend, by strength falling, trend rising. And what you'll probably see at some point is trend high break on strength somewhere along here. And once you see that trend high break on strength, you're going to start mooning, right? That's where you're going to really start breaking out here, which is really interesting because like it's been here for a long time, right? So this will be the first breakout it's had in decades, if that occurs. But again, this is just my thoughts. Can that be invalidated 100%, right? Like,
Yeah, no, I mean, totally. I mean, one of the reasons why I wanted to get your opinion, because it's one position that we have on right now.
yeah, I think that's a pretty strong trend, to be honest with you. And I think if this breaks out of this range, like people are going to be so excited. All the people that have been sitting here trapped might actually add to their positions versus trying to get out of them, because they might think that this is some kind of cyclical cycle move, right? So it's a pretty
Right.
interesting chart, personally. I haven't
Yeah.
actually looked at it. I mean, you want to see another anomaly? This is another anomaly right here. Like completely
Beauty.
makes no sense at all.
Yeah. Yeah, I've seen this company.
Like if anybody can explain that to me from a fundamental standpoint, I'd love to hear it outside of its makeup. But
I don't know enough to be dangerous. I just know that Beauty
like look at this
had
ball,
had,
man.
had a great run.
It reminds me of insurance companies. There's no retraces, just straight up.
Oh
Um
yeah, insurance companies have been crushing it.
Dude, they when do they not? When do they not? Another one too that's starting to show me that FOMO is starting to kick in, because I use Robinhood specifically, and this is somebody that I know brought this up too. Robinhood specifically, I use this as an indicator of memes and FOMO, right? And you have nothing but air on Robinhood all the way up to like up here, like I don't even know where's that at, like $50, right? That's pretty nutty. Like there's no resistance here. This is just a flush straight down. You had this consolidation range, and now you're starting to break back into the range. Like this thing breaks out at any point in time, closes up here, it's gonna just run for it. And that
What
means
is
that,
this is a monthly? Okay, so there's still time for that one to close. But
yeah. And if you look at that, like a 200% move on Hood, I couldn't even imagine what meme coins would look like if this were to run.
Yeah,
Like you're
Will,
talking
I
multiple
mentioned
billions.
Robinhood a while back. Well, not a while back, but maybe a few weeks ago.
yeah, you mentioned it. I remember.
To me, this is just a high time frame indicator that this trend continues. It doesn't end yet.
Yeah, I mean, I think Coinbase's chart probably looks similar, but it's that one already kind of did the what you're saying there.
Yeah, I think again, it's just, where is risk at? And then another thing too is you're starting to see other exchanges catch a bid, right? Look at Crow, for instance. Crow, obviously, you're buying it because you expect the platform to do well. There is definitely a trend starting to kick off here. So this means that when Coinbase was the only attention grabber, that was where you're kind of like near a bottom, right? But as you're starting to see more and more exchange coins get bids, basically vaporware get bids, because people are thinking of this like a stock, like it's some kind of bet into buying into crypto.com, even though it's not. And you're going to continue to see these things start to veer up too. This means that you're getting more people entering the market in a sense. Not to mention Coinbase going down already multiple times now too. And this is, I think, again, due to volume fluctuations and inflows, and just people really starting to reactivate in the market. Reactivation is not a top. It's simply where you're starting to see people come in and start to provide liquidity, and you're starting to provide support for a big move in the market, a big move to the upside. NVIDIA, this is an interesting one. Hit what, 970, 980, somewhere's in there. So 972. And one indicator that I used here is that I said if NVIDIA breaks this bear trend, you're going straight north. And it's already broken it. So if it holds here, like,
Yeah.
NVIDIA is going to continue to do this ridiculous, like, probably, I threw it's just a fractal. It doesn't mean this is factual. But, like, I mean, arguably $1,300, $1,500 NVIDIA.
That's one that I got out of the way on, or just like kind of was just like, yeah, no, don't be short this, don't go against this one. As soon as, especially I think after that first earnings report, after what happened, I saw all the valuation people coming out of the woodworks on Twitter, like posting like, oh my God, it's trading at 50 times revenue, blah, blah, blah. That was when I was like, okay, any, like all these people on value are gonna get crushed.
Everybody's off sides. Everybody's off sides at the moment. If they're talking about valuations or PE ratios or any of that stuff right now, like PE ratio. Well, okay, I won't argue in some cases. Some cases PE matters, but in the case of Nvidia and your top 5-10, PE does not matter right now. You got full on FOMO.
So this is an interesting segue because, I think in these types of markets, predominantly the expensive becomes more expensive because you're paying when you have this disparity of growth where the Russell 2000 earnings were actually down about 19% over this last quarter. However, NASDAQ and S&P 500 earnings were up. S&P 500 earnings being up mainly driven by the top mega cap companies, but you have this, so again, you have this disparity in earnings where a lot of that concentration is coming into within many growth stocks and a lot of the mega caps. So people in this type of market are paying a premium for a company that has accelerating growth. But a company that we've liked for a while now that I've written about, it's named NMM. If you look that up, this was a value company. And so when you're throwing out, how value or valuation, we were about to say valuation doesn't matter. It really doesn't for a lot of times, but this company before, two M's, NMM. This company was trading at almost less than a 1 PE, or trading at a, like, maybe it might have been one price to equity, and it was trading at a discount of, it might have been 77% discount to its NAV. So NAV being net asset value. If they just completely liquidated and scrapped the business, they could sell it for almost $120 a share. And at one point this was like $20 a share. And yeah, so this is, I guess, an example of a company that's been outperforming the market, and it's not a growth company, but it's, again, it becomes one of those things when these value companies, valuation doesn't matter until it does, and people are able to recognize that, okay, oh wow, this is either really undervalued or there's some type of catalyst. And in this case, recently the CEO who had like a 12% stake, she increased her stake to about 15 to 16%. And it's said that she's talking, or there's like rumors that the management might be trying to buy out this company. So just something to keep an eye on. The NAV is somewhere around like 115 to 120 a share. So if they were going to buy it out at 100 or whatever, that's still you could still make money from where it is today if it comes back and consolidates. But yeah, it looks like on that trend you drew, you're kind of getting like around $100 a share.
Yeah. So like if you look here, it's primarily because you got no resistance here, right?
Yeah, there's none.
Once you get above here, you just kind of teleport to 100, more or less. And then from there, that's how this market's been.
Well, that's, yeah. I mean, it might not go higher than 100 if the management team decides to buy it out, and it might just go to 100, and then that's your upside. But yeah, I guess
Yeah.
it could go up more if
But
they don't buy it out.
you could realistically make it into this range, which is a little bit higher, roughly around 140. And then I think like if you get above there, really in reality, you're probably going all the way up to all-time high, and you're hitting like 289. So it all depends on where the market wants to bid, but I think it's a safe bid up to 100 at least, and then from there.
Yeah, so this is a shipping stock. They own dry bulk, they own tankers, containers, and so yeah, that's been one we've liked, but it's had a good run. So I'm going to be patient to add to my position here because I want to see it consolidate, or maybe it pulls back, maybe it doesn't, but that's why, just be patient and look for.
I mean, it's not a bad move if you got it at the low. You got a 300% return roughly.
Yeah,
so,
no, I mean so
for a stock company, it's a pretty solid pickup. I think you're gonna see more and more of these. I think like there's a ton of like great stock picks I think in the market. Funny one here is ARKK. As you can see, I got a lot of stuff here for this one, but not really too interested in this one at this point. Like it's just too much hesitation. I don't think people are interested in this ETF specifically. I think that people are interested in BlackRock's ETF and ARKK using this as a narrative. It might work out, might not. But one thing I would kind of pay attention to here is that like really you got a little bit of hesitation here, a little bit of hesitation here, but ARKK could see some decent upside at some point. I just don't know where. Yeah. And this is why I don't think like your return here is ridiculous. Like it's not even worth it. But this is why I don't think that the froth has really kicked in yet, because stocks like this are still continuing to underperform while they should be performing.
That could just go back to her incompetence.
That's very true too. I mean,
I like go up to Arch right above ARKK, because that's one that I've actually had on my radar. This is a coal company, and one that I've been paying more attention to because it's dramatically underperformed one stock I've written about named AMR, and wondering if we start to see this one play a little bit of catch up. But
so I don't know when I drew this, but it looks like I got it pretty close. I was expecting it to come in here, obviously, and I was expecting it to continue to.
Yeah, you might have drawn it the last time we talked, because I like these coal companies.
But so far, it's played out pretty well, right? It's played out pretty well. Arguably, I mean, you kind of broken top here a couple times, but this could turn to resistance. But you're also kind of like near that 50, so it's like,
yeah, we'll see.
It's a hard call. It's a hard call. Now it's not as clear as like a lot of charts, right? Like that's the thing with a lot of these is the clarity on some of these are really good.
Yeah. So here, sorry, didn't mean to cut you off, but
Yeah.
I need to jump and go to dinner here in a second, but I saw some people had some questions in the chat. Maybe we can switch back to talking about what would it take for kind of going back to, we were talking about that switch to utility, that kind of belief, the water kind of overflowing the table. We were kind of cut off a little bit during that conversation when we first started. So maybe you could go in and talk about what in your mind take to see kind of Bitcoin dominance taper off and see that lift in altcoins.
So for me, I think like it's more of a factor of trying to factor in total two, total one. Like I've been trying to separate from that as a whole, but like I think it's something to really pay attention to. As you can see here, like again, another chart that I haven't looked at in a while, but played out pretty well. Played out pretty well. Low was pointed out here, tapped and then rolled. So total three for me, like I would take that. I would say this, like you'll probably start to see some serious shifts somewhere towards the top, right? Like up here. Again, the belief stage happens closer to the top than it does to the middle. And it's kind of like that midpoint or that transition point for the market. And what that belief does, I'll give you the reasonality, is that belief creates complacency, right? And complacency creates buyers that only hold and don't sell. And that creates exit liquidity, right? As the market starts to shove down. And then that creates panic, and that panic then creates anger, and hey, this thing's going to zero, and then depression and yada yada yada. It's kind of like the cycle of life in a sense. And so for total three, like we haven't even reached all-time high yet. Like this is what I mean by FOMO. Like think of it like this. I'm not saying it will be exactly like this, but I'll give you context. Just look at this bars from low to high up here, right? And just imagine where we are right now. Imagine where we are right now, right? We're here. We haven't even reached all-time high yet. Alts haven't even caught up to Bitcoin. Like the altcoin market could go absolutely ballistic. Do I think 4 or 5 trillion? Probably not. Maybe we kind of dial this down a little bit, right? Somewhere's in there. But if we were to do a fib, low to high, right? And we were to say, okay, what's the bottom, low to high? And we were to say kind of your 1618, it says that alt should reach relatively into 2.64 trillion, right? And so if we were to go with that specifically, I would argue that we still have a long road ahead of us, and we'll probably see the transition occur somewheres in here, right? Somewheres in that consolidation range, or at least where the consolidation will begin. So probably around like 1.4 trillion on total three, I would say, which is minus Ethereum, minus Bitcoin. We'll probably see that transition from meme coins into belief coins, aka utility. And up here, you're basically playing the top, but you still, as you can see here from this growth pattern, you still have a lot of growth here. So if you rotate correctly into utility, aka games, or not L1s, not L1s. L1s are just where the liquidity loads to kind of show where the money is going to be in the ecosystem, but more into like things that are on the L1s. This is going to be the future. This is going to help this L1. This is going to be the layer 2. This is where Polygon performs. This is where all your L2s perform, right? This is where Mana performs. This is where Immutable X performs, and so on and so forth. I can go on for days on names, but this is their performance areas up here. Memes right now are probably roughly into here, and then probably gaming and euphoria, NFTs, all that stuff will occur in here, and then this will be utility and use case, and this is the cyclical bottom, super cycle, yada yada yada, before the reversal. I don't know if you're still there.
In terms of Bitcoin dominance, obviously it's still at a higher percentage. You can essentially invest in Bitcoin and get a lot of the returns that are in some of the altcoins, obviously not all of them. But in terms of Bitcoin dominance, once that starts to trend downward while everything else is, still going up, and, you see just the total market cap accelerate, where do you think that Bitcoin dominance is going to come down, which will essentially, mean that, altcoins are definitely going to take over and start to have that huge altcoin cycle.
I think
Here,
be,
one
go ahead.
before you answer that, I just want to say that I think one environment that we need to look out for, and that I've noticed over, say, the past maybe, I guess, 4 years at this point, is that from a macro condition standpoint, at least, when growth is accelerating and inflation is accelerating, that condition set is more conducive to that quote unquote altcoin explosion. But when you have growth that's slowing or maybe not growing as fast while you have inflation accelerating, that environment is better for the larger cap Bitcoin, Solana, and Ethereum. But that's just one observation that I've noticed from a macro perspective.
I would say that we're already in the midst of inflation starting to re-show its face. Like I don't think it's a bad thing. I think it helps accelerate the process of the market growth, right? And then at a certain point, it becomes a bad thing. And that certain point is when the market's getting ready to implode and everybody's in profit. I don't think.
From a market perspective, it helps prices, but I don't think it's positive for us consumers.
Well, no,
I don't like that for the people, at least.
yeah, I mean, it is harder on the pocketbook if you're not invested, right? It is harder on the pocketbook if you're not making six figures plus a year. And I'm not saying that in any shade on anybody who doesn't. I'm just saying like it's not harder for those people. But people that aren't invested, people that aren't making six figures a year, yes, they will suffer in those environments 100% based off of costs. But the government doesn't care about costs. They don't care about any of that stuff. They're like at the end of the day, here's my thoughts. All inflation numbers right now are bullshit and faked. That's just what they are, right? Like we can argue about it whatever we want.
I mean, yeah,
do.
you can make a whole case about the reported data from our government being fake. The fact that 11 of the last 13 non-farm payroll reports have been revised down is just like fucking, sorry for my language, it's crazy.
Yeah, no, and that's exactly to the point. Like I think inflation is still here. I think it's going to ramp back up, but again, all it's going to do for us that are invested is it's going to accelerate our growth of our portfolios. The hard part is going to be people pulling the trigger to be able to take profit when the market gets toppy and sit and wait, right? And or short, either one, right? Like you can definitely hold, but you better hedge and you better have a lot to hedge with because when this market comes down again, I would argue it's going to be 2022 2.0. It just how much higher does that occur from? And I think it occurs from much higher, and that's why I'm very bullish now because I can see kind of like a headwind of inflation incoming, and inflation going up pushes markets 10 times faster up, and so your growth goes way up, and then if you're able to take that wealth and hold it, you can see the entire market get slammed on its face, and then you could take a re-entry and you could do what all these big money managers are doing continuously every pretty much every 4 years or so. And this happens like twice every decade. Like if people really pay attention, usually about twice every decade you'll get a bear market, right? And that again, I think that plays more into the 4-year cycles.
So
Yeah, it's definitely becoming less so with the fiscal and monetary stimulus. They're doing their best to try and limit those bear markets.
yeah, Janet Yellen's got the whole team on her back. It must be hurting.
Yeah.
Yeah, I was running
But-
this here for a while. It's funny.
So what do we got on the screen here, Will?
So this is BTCD, and I think just too many people have paid too much attention to it. I mean, look at where we are. Look at the trend. Again, I think it's ultimately this thesis, Aaron. This thesis plays right into what I was saying about Bitcoin, right? And again, it's a compression move because here's the thing. Look at your trend. Look at your trend here. BTCD is doing the exact opposite of what Bitcoin is doing, right? Bitcoin's got the bear top whereas BTCD is continuing to, basically accumulate for this big explosion. I don't think it happens here. I think it happens probably next cycle. Again, we're just getting compressed, maybe one more cycle, and then Bitcoin boom, right? That means Bitcoin outpaces the entire crypto market. Does that mean that the entire crypto market implodes except for Bitcoin? Possibly. Does that mean Bitcoin goes up exponentially against the rest of the Bitcoin market? Possibly. Hey, who knows at the end of the day with that one? But again, this comes into this whole thesis. And when I say distribution up here, I say distribution because sell, 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 sell. You're compressing the move, right? And then, so it's kind of like, I won't say this, I won't use the word distribution. I know a lot of people, some people were commenting in the comments. I'll say contraction and then expansion, right? This is contraction into big expansion. And again, you see this on Tesla, contraction into expansion, contraction into expansion, contraction into expansion. And I think that Bitcoin, on a cyclical standpoint, on a bigger time frame standpoint, at some point we'll see this massive expansion. Does it mean that it goes to $300 million? No, maybe it's like to here. I don't know. I don't know what that looks like. I'm not going to sit here and speculate and tell you guys, at some point we're going to go to $500 million Bitcoin, because I'm not one of those guys. I'm a guy that's looking at what's going on here from a structural standpoint and taking it from, I believe that Bitcoin will succeed. And I'm telling you that this contraction will turn to expansion. And if you look at BTCD and you were to face it again on a higher time frame standpoint, I would argue you're looking at the same thing here. As BTCD has less and less and less relevance, eventually it has all the relevance. And I think that's where a lot of people are missing the plot with crypto and with Bitcoin specifically. What's your thoughts on that one?
Yeah, I'm not sure if I mean, you got to think of it too as, these smaller coins do get popular over time. You have more legislation from Washington on, like, what's allowed, what's not. Maybe, Bitcoin just starts to lose a lot of that market cap, and, this is just going to be forever trending lower and lower. And, maybe 10 years, 15 years from now, Bitcoin dominance, the norm will be, less than, 30%, maybe this just keeps trending on downward and downward as the crypto market matures.
Then you would be theorizing the SPY. Think about that. And even though the SPY ended up in that situation where its growth is so minimal, it's not even funny. It's still one of the biggest growth stocks in history in comparison to every other one.
Yeah, I mean, even if Bitcoin is 20% of the market, in 20 years, and the total crypto market capitalization is, like 15 billion, like that would be pretty good. Or I'm sorry, 15 trillion. I'm sorry, not billion.
I was like 15 billion. Hold on.
No. Yeah, so, like, let's say it's up to 15 trillion, 20% of that. I mean, that's still, you can still have a very large and mature Bitcoin at that point, even though it's at less dominance. But it'll be interesting.
At this point, though, with BTCD, I think too many people are focused on achieving something that's pretty much already been achieved, because here's going to be the trick. And this is the trick where they got a lot of people at 25K. What happens if BTCD sits here and does this, eventually touches the trend, and then starts coming down?
In that consolidation period, that's where you'd probably see some alt action.
Exactly the point. And I think not enough people are thinking about that, right? They're thinking that somehow BTCD has to do this, when it doesn't. It doesn't have to achieve higher from here. It's already achieved trend, right? And until trend is invalidated, I would just go with trend. And so because trend is invalidated in my eyes, this is telling me that BTC can continue to go up, but alts may continue to follow. What's your guys' thoughts on that?
From a trend perspective, I think that makes sense. One area, I think Johnny brings up a good point, being regulation. I think one area that's still unforeseen where and part of the reason why, I've been like more bullish on Bitcoin over alts generally has been Bitcoin's kind of got the stamp of approval. Now it's becoming institutionalized, becoming a part of everyday portfolio allocations for all types of investors through kind of the BlackRock system and the tentacles that trickle down from that. And Johnny brings up the point of regulation where a lot of these altcoins are, some of them you call vaporware, but some of them are quote unquote companies, but they don't report any of their financial statements. They don't report anything that any of their company operations. And in that regard, it's kind of it's almost kind of flawed that they're out here selling people their coins or tokens as a way to fund their business when they're not giving their investors transparency to how they're operating or how they're utilizing that capital. And that could be a point of contention in the regulatory process. And I don't necessarily know how that would play out in the markets, but I think that ultimately would make a stronger case for Bitcoin over some of those alts at some period of time, not knowing when that would be, but that's my thought on that. Johnny, do you have any follow-up on that?
No, I mean not necessarily. But one thing, because I know I'm sure Will, you want to get some stuff, done today on Sunday. But my last question that you've kind of hinted at was, once you find some of these L1s where you see a lot of liquidity go into, you not only do you want to have a core position in that, but also too, you also want to be able to spot, the different up and coming cryptocurrencies that are within that ecosystem to really try and propel your gains. In terms of like the big ones that everyone knows about, which is like, Solana, AVAX, those types, what's like your favorite L1? And then I guess in terms of the best potential ecosystem, you don't have to go into like specific coins,
Mhm.
but I guess what ecosystem do you think has like the most potential? Like, for example, let's just say like I really like AVAX, and its chart has or its ecosystem has the most potential, or Solana, whichever, and then we can wrap up on one of those.
Mm, I have a couple different positions. I think meme coins and volume, probably Solana, staying power, and good and future volume, probably Ethereum. And so I'm already positioning ahead of that. And I think
Mhm.
like another one too that people just aren't paying enough attention to. I know a lot of people like say, but I'm not an active user of it, so I won't comment on it. But I have used Sui, and I think Sui is pretty solid. I think it's very easy to use. A lot of great plays I think that will come out on that. So I mean, if I were to think about it, I would say probably Solana for volume in and out, Ethereum for future volume, Sui probably an up and coming sleeper. And arguably, I would even keep Aptos kind of in that back of my mind too. The reason I'm so bullish on Sui and Aptos specifically is because Meta Team, right? And they were the ones that were coming out with the Libra token and all that stuff like that. They were creating all that, and they split off into two teams, created two different blockchains. I think anybody involved with Facebook specifically, or Amazon, or anything like that, or Google, I've worked,
100%.
yeah, I've worked at Google before, and like those guys are just so smart, man. They're so smart. So like to doubt their ability to capitalize on this market or be able to create something great is just it's a fault of your own if you're fading that. So those are kind of
Totally.
like my ecosystem picks when it comes to crypto specifically. There's a lot of choices out there. I mean, granted, too, I want to say one that I kind of keep in the back of my head, but haven't been playing on actively, but I do utilize is Binance Chain, right? It's just because it's an old school one. I don't care about the token. Everybody has their own opinion on the token. We all think it's vaporware, um, but the chain
Still one of the
itself,
biggest.
yeah, for sure, for sure. But the chain itself it's solid, man. Like there were so many great plays in 2021 on Binance. I think just people will sleep on it. It'll become a new mover, probably near the top of the market, but it'll do very well. So those are kind of my thoughts on chains. Sui is something I'm actively continuing to dive into and look into their ecosystem and see what I can find in there. I haven't found anything yet, right? Like a couple things, like they got Scallop on there, highest TVL on there, and a couple other things, but specifically, I'm looking for things that will attract retail. Because if you can attract retail, you can attract, businesses and so on and so forth. You attract businesses, you attract big money, and then sponsorships and movie stars and yada yada yada, and end up somewheres with a Lunar FTX 2.0 and then cycle in. But you get the point.
Ethereum Max.
Ethereum Max. There we go. A fight, Ethereum Max, where basically two boxers fleece everybody.
Once Logan Paul starts to push a coin on those fake fights that gets promoted, that's how you'll know.
Or launch another NFT project based around eggs.
Yeah, exactly. Or offering a 10,000% APY.
Yeah, yeah, yeah. You gotta avoid anybody famous. Those, I mean, who was the basketball star that just did the AVAX rug?
I don't know.
Man, I think I want to say Drew.
An NBA.
Yeah, he did the NFT project and a bunch of other stuff, and then rubbed it all, and then like deleted everything.
Oh my gosh.
Yeah, so like you can't trust those guys, but
Yeah.
yeah, those are my picks, man. I'm hoping to see some real development in Sui. I'm hoping that's when I'm really betting on Sui Napdos.
Well, just to close out here, one, we thank everyone for joining. I know we had a little technical issue in the beginning. It sounds like from what people are saying in the chat, they want, more of these. We'll definitely be having, some more of these. Not sure on the schedules yet. Kind of just wanted to touch base and everything like that. But, from our conversation, it seems like things definitely aren't over in terms of, how speculative this market can get to, as well as, looking at macroeconomic factors such as liquidity. It's an election year. And when I say election year, I mean that, like, the incumbent wants to just keep spending because one of the biggest points of that is the economy, right? So, deficit spending could continue to accelerate, even though it did last year. So, and that's been a huge thing that a lot of people who paid too much attention to, certain macro indicators, they definitely, um, I think they underestimated fiscal spend last year. But it looks like, just from looking at trends, that that's continuing. So, you know, I think that we're in line, Will, that a lot of this could continue going up.
Yeah, yeah, and again, I mean, here's the thing, as just kind of a closing position, I want people to kind of understand is like the fibs have worked really well with Bitcoin specifically. So like if we look at last cycle high to low, you basically nailed your 1618 to a T, right? And so if we were to arguably say the same thing this cycle, and we were to say, hey, let's try and nail our high to low, just kind of as a closing, just kind of some food for thought. I would argue we'll probably nail our 1618 again, even as unrealistic as that sounds.
Which is 178.
Mm-hmm. And maybe it's a little bit lower. Let's try and get this precise, and not necessarily kind of like not too precise. So this is previous top, previous one. Now we can argue this top, that top. I think it's nuance. We'll go with 165 moderately, right? Which for me, I'll give you kind of my thesis is like if you get into like 135, it's my time to really start kind of like dialing some profits out, and then kind of like not really adding to the market up here, right? It's more of me coming out of the market, hanging out, maybe dabbling with a little bit of liquidity here and there if I see an opportunity, but not being really asset heavy in this area of the market if we end up going up there.
Right. Gotcha. Well, awesome, man. I mean, yeah, Bitcoin, as far as like total market cap goes, I mean, if you compare it to another small asset comparatively, which is gold. It still has a long way to go. So I mean, I definitely think that at least in our lifetime, we'll be by the time we're some of these people in Congress's age, I think we'll be looking back laughing at this price of Bitcoin. But yeah, Will, we appreciate it, brother. Good catching up. We've been, friends for a while now. So we're gonna keep that continuing.
We do have our own private cabal text chat. No, I'm just playing. But we
That's right.
we don't always have to see, and this is one thing I'll tell people, like, you don't have to see eye to eye in the market to be friends with people on every single point. It's just always good to gauge good people to understand kind of different theses and use that to help you gauge your own. Helps you from staying in a bubble.
Yeah, I mean, you don't want to operate in a vacuum. It's if Will and I disagree on something, that's good because it takes two people to make a market, but also it could help us learn from one another of why a decision making process could be right or wrong, or where one of us could be blind in some area. It's always good to hear other perspectives from other people, and I think Will's an excellent technician, so I always love hearing his take on anything technical related. So
Definitely.
Absolutely. All right, guys, enjoy the rest of your Sunday. Watch out for that new time difference, and we'll catch you guys next time.
I guess.